But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
Welcome back to the Junius Maltby channel, where we are going to discuss the biggest wealth transfer in U.S. history, beginning. That's something we've read in articles in the past. Stansberry Research has discussed it. We've talked about it here, and many people interpret it in different ways and how it will manifest itself and how it will unfold, if you will. Sometimes I sit down to make a video and I've been reading certain articles or going over certain materials, digesting certain information, and it's hard for me to come up with, what are we going to talk about today? What's the conversation here on the channel going to be like tonight? And there's often so much going on these days, I can't pinpoint any particular topic or headline or article to read through or even opinion piece, because that's something we do like to enjoy as we go through and we read a piece together. Tonight I pulled a multitude of headlines and articles that all tie into one common theme, and that is the results of what we saw unfold recently and what it might mean. And to me it points to, the fact that people need to prepare in ways other than even wealth preservation. I mean, there comes a point where it's great. Yeah, you've got a stack of metals. Now what? What is it going to look like? How are you going to transfer them? Or what is the environment or the regulations that are going to exist in which you own these precious metals? Those are difficult questions with answers nobody really can come up with, because we cannot predict the executive fiat or decisions governments will execute in wealth controls, because that's something they do. It's historic. There has been precedent set, even in this country, the land of freedom. Freedom, right? They confiscate gold at gunpoint, 1933. So that's something to consider. Although I don't see that happening, I truly do not. I've talked about gold confiscation in the past. But tonight, join me as we go through some headlines. I mean, how bad is it? How bad is it going to get? I think most people that are part of the Junius Maltby channel are a little bit more in tune with the weather pattern that we're experiencing, the economic weather pattern, the barometric pressure, the winds, the storm on the horizon. We've talked about it for years. I mean, how could we not? It's literally been the discussion here. And you can go back in the archives and just see it. I know some of you have actually been really good at that lately. You've been doing kind of the reruns, because I'll see these comments and you'll post a comment in a video that was done 4 or 5 or 6 years ago and comment on how it relates to today. And I appreciate that, believe me, because there's times where I forget what's buried deep in the archive lockers in the dungeon of this channel. And you guys seem to go ahead there and find them. So let's take a look here. We'll read through some headlines. I did pull an opinion piece that I want to share. This might turn into one of those long, drawn-out videos, and if that's the case, well, you know where the pause button is, or how to X out of YouTube. It's not that hard. You can actually go to the upper right, or, it's the upper left on some computers, and just X out, and you'll be done. But let's take a look here at the first headline. And if you know anything about this channel, you know that I'm going to take side streets and alleyways and get sidetracked and even confused by myself. Sitting here, I get distracted and I'll go off on tangents. That's just the way it is. If you're familiar with the channel, you're familiar with that tempo, because these are extemporaneous ramblings oftentimes. It's just me sitting here having a conversation with myself and the blue microphone here on the other side and you guys. And that's the origins of how this channel was born. And I might sprinkle in today a little bit of discussions that I've had with companions, friends of mine, that have different walks. I mean, a lot of them aren't as into the things we talk about here, but they do have investment ventures of their own, advice, things that they're doing. And we discuss a lot of the topics that I talk about here, and then they'll share their point of view. What do they think? How are they going to invest or prepare financially for what's coming and what we're going through, what we're entering into? This one here, are investors driven by FOMO? That's short for fear of missing out. Or is a retest of the lows coming? What strategists say about the stock outlook. And that's going to introduce us to a couple of headlines and articles coming up. But I want to interject on this one here, because I do have some friends that I would consider, well, kind of like strategists. I mean, everyone's a strategist. You are a strategist. If you stack metal, that's your strategy, right? A lot of them agree that obviously the Fed stimulus we've looked at, the trillions of dollars, the debt, the new modern monetary theory, no reserves in banks, unlimited credit and spending with the Fed and the Treasury, this bizarre relationship. We've talked about that. The last video kind of covered that a little bit. We've seen bailout after bailout after bailout and stimulus and quantitative easing. Well, ultimately, it doesn't take a rocket scientist to realize that is going to cause serious deterioration in the strength of the dollar going forward. Yeah, people are running for it now or retreating into it now. When they sell equities or assets of any kind, they land in dollars, the world reserve currency, and that too is going to change. We're seeing headlines and news come out with the digital yuan in China moving towards digital currency. We've got all kinds of threats for the dollar maintaining that reserve status. It's not going to be there forever. I mean, yeah, it is the leper with the most fingers left, but pretty soon I think the remainder of those fingers are going to fall off, and it's just going to be a typical dead, crippled fiat currency buried in the trash heap of history where other expired currencies go to die. What do you do in that situation? What are places you can park wealth? Obviously here we talk about gold mainly. Silver, its crippled little cousin with crutches. It limps along. It tries. It's a good place to go as well. I'm not a big fan. I'm not as big of a fan as I am of gold when it comes to silver. I do like it. I think it's a little bit more volatile. It has been money for 7,000 years. I'm not going to make this a silver video, so I'm not going to get too into it. I get enough flack for those as it is. I like it. I have it. I struck the coin of this channel in silver. The first one. The second one, of course, was in a 1/4 ounce of gold. What are other places people might want to go? Well, I think commodities are always going to be good. I look at this chart and I look at this headline, and I look at what's going on. And one of the discussions I had recently was with a friend who's a very large-scale agricultural-based individual. We talked about fertilizer. He's talked about fertilizer for years. He spends about $1 million a year on fertilizer. One of the things we discussed was with the diminishing amount of agricultural land available, farmers are being forced to get greater yields on smaller plots, smaller amounts of land. In order to do that, they required a particular ingredient, and that ingredient is fertilizer. Potassium, potash, nitrogen, things like that. There's a multitude of different types of fertilizer and blends, but these guys need fertilizer to get crops to grow, and that's food. People need food. Food, agriculture, those things will always hold value. I mean, civilization has required food since its beginning, and farmers have existed since we became civilized and settled in groups of people and in municipalities and forming, city-states and governments and such like that, to our own demise, I guess. So yeah, we talked about fertilizer, certain agricultural-based stocks, and companies that produce or ship fertilizer, railroads, the companies that make the fertilizer itself, farming equipment, big agricultural-based, like John Deere, for example, companies that make things like combines, Case International, and such. Those guys are going to continue on. They're going to have to. They're going to maintain. They're going to produce. And fertilizer being a raw material, a commodity, if you will. I mean, it is a material that is needed for society. There's a lot of things in society we don't need. We don't really need smartphones. You don't really need your Netflix account. You don't need Facebook. You don't need a lot of those tech stocks that exist out there. You don't need them, honestly. TJ Maxx, Target, you don't really need those places. You really just need food and grocery stores that sell it. So I do believe the agricultural-based stocks are going to be a good place for some people that don't want to. Now, this is for people that don't want to buy gold. You know, if you don't want to buy the ag stocks, buy some agricultural land and become a farmer. Who was it? Jim Rogers, who said farmers would be the ones that hold wealth in the future. And I truly believe that's. I did a video here once before on agricultural land. It's buried in the archives, a picture of a wheat field. And I do believe that, yes, anything tied to agriculture is going to be a good thing. Diesel fuel is required for that. So again, oil being a commodity, a necessary commodity, it's gotten the heck beat out of it recently. We saw it crushed. We talked about that. There might be some good opportunities to hold oil companies there that might pay. Again, but they're going to pay you in what? Dollars. You're going to have to buy their shares in what? Dollars. So there's a problem there, kind of a hiccup with some of us. But if you do believe that dollar is going to still exist and these companies are still going to exist and that we're going to pass through this tumultuous decade of economic demise and come through the other side still surviving, still with many companies that exist, you might want to look at and explore those options, ag stocks, oil companies, things like that. And that was a conversation. I'm just sharing it because I had that conversation today, so it's kind of fresh in my memory. And we talked a lot about those particular issues. Again, the theme there being currency deterioration. Commodities react to a falling currency's value by increasing in their value. Inflation's coming. I mean, anybody who knows anything on any one of the financial networks, MarketWatch, CNBC, you name it, any of the hedge fund managers, these guys are all taking a position right now to both short the markets because it's going to drop further. We're going to see that and take a look at that, but also prepare for inflation proofing their portfolios or taking positions in areas that are likely to survive in mass inflation and rise in value and also see continued growth in those sectors. So I think there's a lot to be said for those areas. Now, if you're just here to hedge wealth and hide out until the nuclear fallout's done and then climb out of your bunker and have some significant wealth, gold obviously is it. We'll show you the chart at the end of this video that even shows that it's not going to be something that's news to any of you. And we don't really need to beat the gold thing into the ground tonight. We don't. I mean, you're on the Junius Maltby channel. You know the position on gold here. And if you have any questions about it, if you're new, if you just stumbled upon this video and you somehow lasted 12 minutes already, which would be surprising for any newcomer, there's a lot of videos that outline the the ideology of saving in precious metals. I mean, I have a video literally titled that. So let's take a look at some further headlines here. I mean, how bad is it going to get? I think it's going to get pretty bad. Again, already the situation is much more dire and worse than anything we've talked about or predicted here on the channel. So again, I got to say to the people who think we're negative Nancy's or Debbie Downers and glass half empty type people because we're on the Junius Maltby channel and this is all we talk about, well, I got news for you. It's a lot worse than we thought it was. So that should tell you something. Far worse. I mean, when I look at the current events and the direction we're heading and what hedge fund managers and major players when it comes to wealth preservation and investment, what their opinion is and what they foresee occurring, I can tell you right now, I'm the most positive guy in the room. I actually question myself sometimes. I'm like, Junius, what are you doing? How could you be so positive? How could you have such a thought? It's almost like I've got Tinkerbell dust sprinkled on me and I'm waiting to fly because I'm not happy or something. I got happy thoughts. But I shouldn't. I really should. You see the headlines and you see the reality. The actual reality that we're in right now is far, far worse than I thought or anticipated. Take that for what it's worth. I don't know. And I don't know where you are on the globe. I know a lot of you are in Australia, New Zealand, England, Germany. This is an international audience here on the Junius Maltby channel. I can see it in the stats when I go into the analytics of the channel. There's only like 20 or 30% of you are Americans that watch this. So that tells you something there. U.S. GDP in the first quarter is going to be bad, and the damage is far from done. The coming Great Depression of the 2020s. The Great Repression is here, and it will make past downturns look tame, economist says. Here's the latest on the Fed's rescue programs to keep credit flowing during the coronavirus pandemic. We already know what the Fed is willing to do, and that's anything. White House advisor warns unemployment rate will quadruple and the economy will contract most since Great Depression. This leads us to this opinion piece: the coming Greater Depression of the 2020s, 10 trends that will make this a decade of despair for the global economy. Yes, this is a mainstream article on a mainstream site, but that's something we just have to deal with. I could read you the doom and gloom from the guys that wear tinfoil hats, and that's usually along the lines more so with how many of us here on the channel feel about certain outlooks. But let's see what the mainstream financial media is putting out there as far as an opinion. After the 2007-2009 financial crisis, the imbalances and risks pervading the global economy were exacerbated by policy mistakes. So rather than address the structural problems that the financial collapse and ensuing recession revealed, governments mostly kicked the can down the road, creating major downside risks that made another crisis inevitable. I would agree with that. And now that it has arrived, the risks are growing even more acute. Unfortunately, even if the Greater Recession leads to a lackluster U-shaped recovery this year, an L-shaped Greater Depression will follow later in this decade, owing to 10 ominous and risky trends. I don't think we're going to see the U-shaped situation, and I wish they'd stop using Greater Recession, Great Recession. I believe they keep using that because nobody wants to call it like it is, and I talked about this before. The media does not want to use the depression word. I don't even think when we enter full-on depression mode, they will allow that word to be uttered or used because they cannot accept the fact that the Fed and these policymakers and politicians and these governments and central banks allowed for it to occur, because that was their whole mission and goal in the first place, was they would never allow such a thing to happen again. And that's just not the case. The first trend concerns deficits and their corollary risks, debts and defaults. Well, we have the greatest deficits and debts in history of the planet, so let's see what he has to say about that. The policy response to the Kung Flu crisis entails a massive increase in fiscal deficits on the order of 10% of GDP or more, at a time when public debt levels in many countries were already high, if not unsustainable. Yeah, they're unsustainable. Worse, the loss of income for many households and firms means that private sector debt levels will become unsustainable, potentially leading to mass defaults and bankruptcies. Interjection here. I just saw a thing about the banks already positioning for major credit card defaults. People already not making payments on them. It's the first thing consumers and the population does when this occurs, a situation like this, what we're entering into. That's the place that unsecured debt, they just stop making the payments. So now those banks have to eat it with their reserves. They're already limiting the amount people can borrow currently, and they are ending or deleting accounts that are outstanding, or that, what was the thing I read? Basically, people who had credit cards that they weren't using that might have not a balance on them, but the ability to accrue debt, and they hadn't used that card in a while. The banks are just ending the card, making it inoperable, if you will. And they're basically getting in a position, in a situation to where they're trying to cut their losses where they can and protect themselves, these big financial institutions, because they know there's a wave, a tidal wave, a tsunami of defaults coming. I mean, people already were allowed to not pay student loans. Many probably are never going to pay them back. We know that. And the credit card situation, well, you guys know what that's going to mean. Most Americans have $10,000 or more. There's significant credit card debt out there, and they're just not going to be able to pay it back. That's just going to be a fact, a reality that banks and financial institutions are going to have to wrestle with going forward. So, again, soaring levels of public debt, this all but ensures a more anemic recovery than the one that followed the Great Recession a decade ago. A second factor is the demographic time bomb in advanced economies. So this unmentionable crisis shows that much more public spending must be allocated to health systems, and that universal health care and other relevant public goods are necessities. I disagree, not luxuries. Yet, because most developed countries have aging societies, funding such outlays in the future will make the implicit debts from today's unfunded healthcare and social security systems even larger. Oh, it's going to crumble. A third issue is the growing risk of deflation. In addition to causing a deep recession, the crisis is also creating a massive slack in goods, unused machines, and capacity. So there will be deflation in certain areas, but not all of it. I don't think it's going to be blanket. Again, inflation will occur. It's just where will the inflation occur and where will the deflation occur. And labor markets, mass unemployment, as well as driving a price collapse in commodities such as oil and industrial metals. Industrial metals, platinum, palladium, silver to an extent. Again, I hate to break the news to you, but it's a major industrial metal. When this thing really starts to unfold, I know a lot of us thought silver was going to get really bullish here and to follow gold, but it might lag for quite some time, and the demand for it might lag. I know there has been significant demand. Supplies are gone, supplies are down. However, being there's a tremendous industrial demand which creates a price for it, I don't know how much it's going to be buoyed, and rise with what we're seeing take place. It might, in the long term, be a pretty good shot, but we could see it test those recent lows. I don't know. And I don't know if the supplies are going to be there. The premiums are disgusting to me. And again, a conversation I had with a friend earlier today, we were discussing the premiums on American Silver Eagles, and I'll just share with you quickly what he discussed with me. I'll read what he wrote me. We were discussing this. He goes, think of the Silver Eagle premium as paid over spot for the equivalent 1 ounce of gold. Say $10 per Silver Eagle premium over spot. A tube of 20 coins is like $480. So 4 tubes is like $1,920, which is about the price of a gold eagle with the debit card premiums. So people that are buying 4 20 coin tubes are essentially paying $800 in premium. Just $800 in premium over spot, just so they can get American Silver Eagles. And that's where I would say, you know what? Nah, I'd rather have the 1 ounce gold eagle than 4 20 coin tubes and pay $800 over spot. Especially when I look at going forward, how gold is going to react to the economic crisis unfolding and what the central banks are going to do in order to try to salvage it. The fourth here related factor will be currency debasement, which we just touched on. As central banks try to fight deflation and head off the risk of surging interest rates following from the massive debt buildup, monetary policies will become even more unconventional and far-reaching. We are already seeing that. In the short run, governments will need to run monetized fiscal deficits to avoid depression and deflation. Yet over time, the permanent negative supply shocks from accelerated deglobalization and renewed protectionism will make stagflation all but inevitable. A fifth issue is the broader digital disruption of the economy, with millions of people losing their jobs or working and earning less. The income and wealth gaps of the 21st century economy will widen further. To guard against future supply chain shocks, companies in advanced economies will reshore production from low-cost regions to higher-cost domestic markets. But rather than helping workers at home, this trend will accelerate the pace of automation, putting downward pressure on wages and further fanning the flames of populism, nationalism, and xenophobia. Again, the Great Depression, what came out of that? I'm not blaming the Great Depression for World War II, but we do see a rise in nationalism when there is events like this. Nothing truly wrong with nationalism, in my opinion. I think it's a good thing to have pride in one's nation, language, borders, and culture, and to try to protect that and keep it, especially culture and traditions. I'll never argue against that. This points to the sixth major factor, deglobalization. The pandemic is accelerating trends toward balkanization and fragmentation that were already well underway. The United States and China will decouple faster, and most countries will respond by adopting still more protectionist policies to shield domestic firms and workers from global disruptions. Again, balkanization. We have done multitude of videos on that, discussing the balkanization we could see occur here in the United States as predicted by the Russians several years ago. As this country fractures and breaks up along cultural and demographic lines by region and even political ideologies. So that's something that you can see not only happen on the global scale, but even certain nation states themselves break apart and fracture up, similar to what we saw in the United States pre-Civil War. The backlash against democracy will reinforce this trend. Populist leaders often benefit from economic weakness, mass unemployment, and rising inequality. Under conditions of heightened economic insecurity, there will be a strong impulse to scapegoat foreigners for the crisis. Blue-collar workers and broad cohorts of the middle class will become more susceptible to populist rhetoric, particularly proposals to restrict migration and trade. You see the language here? You see what they're doing? Again, this is a mainstream financial outlet, and they're already painting a picture that people that try to protect workers and work to be held by citizens and those in a country is a wrong path to take. Again, this is one of those open border type belief systems that is arising here, is what I'm reading through the lines. Again, that's not to say that everything in this article is inaccurate. I think a lot of the sentiment and a lot of the calls that we're seeing here as far as what could take place, as far as a weather pattern in the future, it is accurate. There is accurate information in this. We just need to weed through it, you and I. This points to an eighth factor, the geostrategic standoff between the U.S. and China. We've all seen this coming. We've been talking about the currency wars and trade wars for some time. With the Trump administration making every effort to blame China for the pandemic, well, they are to blame. They had bat soup, and they have a bioweapon lab in Wu-Tang or Wuhan, somewhere over there. They are at fault. It is China's fault, my friend. It's China's fault. It's a China flu. It's the Chinese flu. It's from China. Chinese President Xi Jinping regime will double down on its claim that the U.S. is conspiring to prevent China's peaceful rise. The Sino-American decoupling in trade, technology, investment data, and monetary arrangements will intensify. Guess what? The counterfeit metal that we're seeing flow out of China around the globe is a sign. They've been doing it for a decade. I think there is a strategic move, an impulse there by China to create a lack of faith in some of the metals in other countries and to steal away wealth from people in Western countries. There's no way the Chinese government does not see and does not know what's taking place. I mean, think of how hard it is to import or export from China, the controls that the communist regime has there. Now, how is it that tungsten-filled Pamp Swiss bars and U.S. Gold Eagles and Krugerrands that are so accurate, so difficult to test, are flowing out of that country by the metric ton every single day around the globe? They're washing it out. It's an act of economic warfare. And China is exporting counterfeit metals every single day, and it's not even an issue you see on the mainstream outlets. It's not even being addressed by the president, by any of the countries. I mean, you would think the EU, the Bank of England, or somebody, the United States, you would think there would be moves to curb that, to halt that, to put pressure on China. There isn't. And again, there could be a reason for that, to throw off faith and shake people away from metals during these trying times. Worse, this diplomatic breakup will set the stage for a new Cold War between the U.S. and its rivals, not just China, but also Russia, Iran, and North Korea. There's also talk of the Sino-Soviet Pact, this relationship with Russia and China kind of in an alliance against the United States going forward. I definitely could see that. I've had conversations with a close friend of mine who happens to be in the know somewhat with those types of matters, that yes, tensions between the United States and China behind the scenes are much more than we are being led to believe, and it's not related to this Kung Flu, believe me. It's purely jockeying for position, for the number one spot, and for superpower status, for control and power, and that is happening, and we're seeing, it's kind of like tectonic plates. You know, when they rub against each other, there's friction, we see earthquakes and volcanoes and such. We don't see the plates really moving, but they are, and there's things taking place. beneath the surface, and that is what's happening between the fault lines of the United States and China at this time. With a U.S. presidential election approaching, there is every reason to expect an upsurge in clandestine cyber warfare, potentially leading even to conventional military clashes. And because technology is the key weapon in the fight for control of the industries of the future and in combating pandemics, the U.S. private tech sector will become increasingly integrated into the national security industrial complex. There you have it. Google, all the search engines, the internet, the entire private tech sector kind of being intertwined with global defense in the United States. So again, that's from that this diplomatic breakup will set the stage for the new Cold War. And I think we're already seeing that manifest in a lot of different areas. The last part there was more about the environment, and I just eliminated that discussion entirely because it's not something I want to spend time talking about here when it comes to climate change or anything of that nature. So we're going to move on to, again, this article, The Great Repression, is here, and it will make the past downturns look tame. The economic aftermath of the 2008 financial crisis was so tepid, it was referred to as the Great Recession. In the wake of the COVID catastrophe, investors need to brace for the Great Repression, which may be even uglier than the downturn of a decade ago. I don't know why they're using this repression thing now. Just use depression. Come on now, guys. Use the right word. That's the takeaway from an analysis put out Monday from economist David Rosenberg. Rosenberg is often considered a Perma bearer, but that's not entirely fair. He's had his optimistic spurts. The highlighted part here that I want to read is a 30% contraction in real gross domestic product in the second quarter, negative year-over-year consumer price growth for 5 quarters, and an unemployment rate of 14.2% by the end of 2020, averaging 13% through 2021. That's pretty grim. That's bleak, my friends, and it's likely going to be worse than that, as we've already seen with those numbers likely to grow. This was a shocking headline this morning. Jeffrey Gundlach is shorting the market, says a retest of the low very plausible. This is right now, even after what some people consider to be a rebound. This guy's shorting the whole thing. DoubleLine CEO Jeffrey Gundlach said the market could retest its March low as investors could be underestimating the social disruptions from the COVID. I think a retest of the low is very plausible, Gundlach said. People don't understand the magnitude of the social unease. At least that's going to happen when 26 million plus people have lost their jobs. I think he's right. I think people are truly underestimating the magnitude of what's taking place and how bad it could get. The so-called bond king revealed he just initiated a short position against the stock market. Actually, I did just put a short on the S&P at 2863. At this level, I think the upside and downside is very poor. I don't think it could make it to 3,000, but it could. I think downside easily to the lows or beyond. I'm not nearly where I was in February when I was very, very short, Gundlach said. Here's looking for a bottom. This is the S&P 500. It could be a dead cat bounce. Look at that 200-day moving average. You can see where it plunged down 34% from its peak. The April 27th close, 2877. It's going to plunge below that. It's below 2200. You know what? We should just say it. We should call it below 2000. You think an S&P below 2000, 1800 even? I think we could see the S&P just get annihilated coming up. I can tell you this, we're going to see an S&P 1-to-1 ratio with gold. That's for sure in the books. You'll see 1 ounce of gold equal the S&P at some point. You heard it here. And we'll definitely make a video the day that happens. White House economists, unemployment could hit 20% by June. These guys were just talking 14%. You know, we've seen the teens. This is a White House economist saying unemployment could hit 20% by June. That's only a month away, ladies and gentlemen, a month and a week. It's a parabolic rise you see on the right there. There's April, 14% going straight up. This is unemployment rates since 1929. You can see just up and down there, kind of oscillating. And you can see the biggest peak there on the left, 25% during the Great Depression. And the monthly rate there going forward, the highest really that you can see since then in the 1980s, in that great, the recession period there, the Volcker years, Jimmy Carter and such, right before Reagan became president. And here we see 14% in April. And again, if it goes up to 20%, that's ugly. And I don't think it's going to heal as quickly. I don't think they're going to have the ability to contain this. I think it's in a state of chaos. And nothing the Fed has done truly has really worked. And I mean, really, what are they going to do? What tricks do they have left? They are already venturing into uncharted waters as far as this new modern monetary theory. And that itself, unproven and, well, not unproven, it's proven to fail in any time it's ever been tried by other countries. And that leads us now to the closing portion of what has already become a video that is too long. The biggest transfer of wealth in U.S. history has begun. Was it done on purpose? Was this orchestrated? Are there architects behind this? Was this a controlled demolition? Was this just an excuse to centralize, nationalize, and consolidate wealth and power into certain people? Possibly. Very possible. I mean, there is definitely a lot of money moving, and it doesn't disappear. The wealth isn't vanishing. A lot of people are mistaken in believing, oh, the wealth disappeared. It was vaporized. It was sucked into some black hole or an abyss somewhere. No, it just transferred hands. At the side of every trade, on one side of every trade, there's a winner and a loser, or a buyer and a seller. Somebody took a loss. That means someone else took a gain. Somebody is taking gains off of the losses of others in the global economy. And you just got to wonder who they are. Who are those that are making these tremendous gains, and what are they doing with it? Well, as we entered this debacle in the fall, when the repo markets were in turmoil and chaos, and we saw signs that the economy was teetering, before any of this news was even hitting, what was taking place? What did we talk about? What did we see? You saw a significant shift in the outlook for gold and where it was moving and where it was flowing. Now, I'm not talking about the dumb headlines you see from ignorant financial advisors that you read here and there talking about putting 5% into the SPDR Gold Trust, getting some gold mining stocks, having a little bit of exposure to gold, maybe 5% in physical bullion and such like that. I'm not talking about that. I'm talking about the articles we read where the wealthy elite were shifting from ETFs, moving to physical gold bars and vaulting it privately, moving it privately, shipping it, holding it, hoarding real gold, and in quantities much greater than even 5, 10, 15, or 20%. We looked at articles and discussed individuals moving 30%, 50% of their entire worth into gold bullion. Now the question is, now I'm talking about gold, that's what they were getting. They weren't getting palladium, they weren't buying platinum, they weren't buying rhodium, and they weren't buying silver. These elite were buying gold. And I think we know why. We've seen it. We've discussed it. It's the roots and origins of this channel. We've talked about it for years. Why? The ideology of saving in gold. What is it about it? And how it preserves wealth, dynastic wealth moving forward. And this is an event that truly proves, I'm going to use the word metal, proves the metal of metal. It proves the metal of gold. Now, really nothing's more boring than charts, but here's a 1-year chart for gold. And you can just see it exploding past the 1,300 mark. It's now above 1,700. It's been rising for 15 solid years. Actually, truthfully, it's been rising since they legalized the contraband. Since it became legal in 1974 in the United States in U.S. dollars, it has been rising. There's been suppression efforts. They've, used central bank activities to sell it, to dump it, and to manipulate it, and to try to suppress the price of gold because they know it's the canary that tells the truth when currencies are dying. And for decades, they fought the rising price of gold, and they tried to prevent it. We just talked last video about the statutory price and how the Fed values gold at only $42.22 an ounce. This chart shows otherwise. The free market, anyway, on paper contract, on paper gold, is in the 1,700 range and closing in on 1,800. We've seen new analysts predict, and banks, Bank of America, talk about projections for $3,000 gold within 18 months. And I believe it could easily surpass those expectations. But there's a chart for it. You can see that dip there. We all know what took place there. Again, do I have to remind you that it was the only asset that had any value that these major banks and financial institutions held? So when they started hemorrhaging on all the other fronts, in order to cover their losses and their margins, they had to dump gold to try to look good for their shareholders and cover those losses and such. So they dumped gold. That's why you see the dip there. That's it. But guess what? Somebody was on the buying end of that. Every ounce they sold, someone was there waiting to buy it. We've seen shortages. We're still seeing shortages on gold, and it's being vaulted by the wealthy. Again, let's take a look at its performance over the last 15 years. Now, I was talking to one of my friends, a different one today, had several conversations, but this one was showing me his portfolio's performance. He said just 1 month, his portfolio has deteriorated, crashed, decreased, imploded by over 30%. And that's because he's in all of those dollar-denominated asset classes and equities and exposed in the U.S. markets. Well, had he been in gold, he would not have lost even a shy penny, not even a nickel. As you can see here, in the last 15 years, gold has averaged year on year 10.1%. And you can see there all those years dating back in the green. 20% years, 30% years, 29% years. Very good years. 13, 18, 12. There's only 4 down years. Now this is just in US dollars. In US dollars, it took the biggest beating. Only 4 down years. You look at Australian dollars or Canadian dollars. If you're in Australia, you cannot go wrong. Look at that. Only 2 down years. 3% and 16%. Nothing. Averaging 10.9%. If you're in Canada, look at this. My dearest Canadian friends, my Canuck brethren, my Maple Leaf flag waving, hockey playing, Molson drinking friends. Can you look at it in Canada, please? It's beautiful. Again, only 1 down year, and it averages 10.7%. Based on that, it looks like you guys should be doing pretty good in Canada. Going forward, when you look at in the euro, the British pound, similar performances. In the British pound, however, I know got my friend over there, Enlightened Patriot, a couple of others. I think DW, you might be in the UK. I'm not positive. But I know there's a bunch of my UK friends listening in right now. You guys experienced 13.4% year on year with gold. So you really haven't ever done bad there. Now the thing is, you're not going to earn that in the marketplaces year on year. You're just not going to. And we're entering uncharted waters. These are different times. This isn't the era of the Oracle of Omaha. This isn't a time to be a Warren Buffett. Okay, he was born and he began investing at a time in American history of unprecedented growth and prosperity and promise. The dollar was king. It was still somewhat pegged to gold back then under Bretton Woods. And he had his day in the sun. I think it's different these days. I don't believe we have the same opportunities. I believe it's a different climate. It is truly different times. And we are facing currency extinction and currency annihilation and a major shift in the way governments address all of the problems that they are now being confronted with. And their solutions are going to cause gold to rise further and going to cause currencies to fall even more. So again, use this chart, screenshot it, print it, save it, use it as a discussion piece. As why you, if you have to, print it out and put it on your refrigerator. And when you're eating your bowl of cereal in the morning, you can look at that and remember why you stack gold. Because this is what it does. This is how it protects your wealth. Nobody can steal it away. It doesn't pay a dividend, I know that. You're not going to get your dividend check. Sorry. Okay? You're not getting your dividend. It's not going to split on you and increase your shares. I apologize for that. Gold, I'm sure, would apologize to you as well. But it's not going to run away from you. It's not going to go to zero. It's going to transport your wealth into the future. Now, I'm not some big expert investing advisor. I'm not. As a matter of fact, I truly don't have a pot to piss in or a window to throw it out of. But that's okay. I'm not here to try to sell you gold. I don't have any stake in it. I don't have a horse in this race. I'm just here to pass on information and try to get as much gold out of the hands of those that would wish to control the price as possible. That's my only mission here. That is the mission, is get the gold out of the vaults, out of the hands of bankers, and into the hands of as many people on this planet as possible, because that's where we can really get them. And then to protect it, to not let them have it, to fight taxation on it, and fight to make gold free, completely free and unfettered by the intrusive and invading, molesting hands of government and statists. Because that's what they try to do, is molest those who own gold through legislation, taxation, controls, and such. No, we need to free it. Well, thanks for tuning in to this Junius Maltby channel video. It's been 45 minutes. I can't tell you it's been fun, but it's been something. And I'm glad all of you stick around and listen to it. I look forward to seeing the comments below. I doubt many of you made it to the 45-minute mark, because you can't lie to me. I do see the analytics. I know most of you barely make it through halfway, and that's okay. I know you have better things to do. Nobody can sit around through 45 minutes of this garbage. But I'm glad those of you who did make it. If you haven't fallen asleep already, I appreciate it. Thanks, as always, for tuning in to the Junius Maltby channel. I'll see you next time. Thank you for your support, for liking these videos, for sharing these videos, and being a part of this experiment.